Those of us who have accumulated substantial wealth, including our business interests, real estate investments, stock portfolios, and retirement accounts, will often hedge or protect these capital assets from tax liabilities, market devaluations, and liquidity demands by funding another different type of asset, a cash reserve asset that isn't subject to market valuation losses or tax liabilities or liquidity restrictions. A cash reserve asset that is guaranteed to grow without taxation or investment risk. A cash reserve asset that allows us to access our money tax-free whenever we need cash. A cash reserve asset that can further guarantee all of our capital asset liabilities, like property mortgages, lines of credit, debt obligations, capital gains, or estate taxes. A cash reserve asset that comes with a contractual guarantee to credit our money with an interest rate based only on the growth of an equity market index, like the S&P 500, but without any risk of equity market losses. So when the index increases or gains value within a period of time specified in the contract, an interest rate as a percentage of those gains is credited to our cash reserve. But when the index decreases or loses value, zero interest is credited to our cash reserve, and those index losses are never deducted, so our interest earnings are always preserved, and our cash reserve is always protected from investment losses. That's because our money is not actually invested or at risk in the market. The market index is only the basis for the interest rate credited to our cash reserve. However, there is a maximum limit on how much of the index gains can be credited to our cash reserve during the period specified in the contract. So we don't get all of the index gains, but we don't get any of the index losses. And there is an internal charge for these contractual guarantees, but typically less than we pay in money management fees. What's more, these contracts are insured, not by the FDIC, the Federal Deposit Insurance Corporation, that insures bank deposits, but by legal reserve insurance corporations that are required by law to maintain capital reserves equal to all of their contractual guarantees. Interested?